Welcome back. Some announcements coming in. Cabinet likely to discuss the ongoing PSU bank mergers this week. Okay, so that seems to be on the cabinet's agenda. But let's get back to the stocks and sectors on the move today. Now, Anand, today we had a very interesting conversation with the chairman of the Petroleum and Natural Gas Regulatory Board, and he confirmed everything. I mean, 6 months is the timeline, and within 6 months, they are looking to end the monopoly of an IGL, MGL, etc. Stocks have started correcting. They're taking note of this reality. What would your thoughts be on the gas distribution companies?
Well, I mean, you may unbundle it, but the question is that, do you have alternate sources of gas of on a volume that you can supply? If the answer to that is yes, then perhaps there will be some pressure. But remember, the same thing was done, for example, in electricity a long time back. I wonder how many people outside Bombay have actually managed to switch the suppliers. And, the fact of the matter is that for the most part, even if you were, for example, generating your own power, you still have to pay to the distributors because there is a certain wheeling charge. You can be sure that if the impact on any of these gas pipeline companies is very large, then there will be wheeling charges which will be there irrespective of how you're supplying it. So over a longer period of time, I mean, there may be a knee-jerk reaction near term on the threat that they will lose their monopoly. But the fact of the matter is that it's a natural monopoly. It's not like you can go and set up a lot of pipelines. The cost of it is prohibitively high. And therefore, you will be able to do your own rent seeking irrespective. I think over a period of time, if the fall is fairly significant, you should be looking to buy them.
Okay. That's on Mahanagar Gas. Mr. Tulsian, what would be your thought process on the same issue, sir? Because there was this Credit Suisse report which spoke about the possibility of ending monopoly, and that of course would be a big blow. But you think this would be a buying opportunity if the stocks correct more?
Anuj, yesterday also I've said that probably I may not take this as a buying opportunity because this purely has a commodity nature of the stocks, number one. Number two, they have a PSU tag. If you take off the IGL or maybe MGL kind of things, and if you go by this one, because I'm in fact this kind of monopoly coming to an end was known to the market maybe for last 6 months or so, or maybe last 1 year. But the advantage with these companies are that they are enjoying a lot on the CNG, which they buy on the spot. And the spot prices of the gas are seen falling, and in fact PNG, if you generally see the IGL and MGL, the PNG proportion is less than sub 20% and CNG is about 80% or so, 80% plus, and that is where they are really making a good margin. And IGL has a volume growth expansion of about maybe 14-15%, while the MGL has been focusing more on the margin expansion rather than volume expansion. So maybe this monopoly coming to an end will not be seen negative for the stocks, but going forward it all depends. Competition will definitely be cropping up, and in fact we have seen that happening, whether you talk of aviation or you talk of telecom, you talk of insurance, but it all depends on the infrastructure creation, how speedily people go into. Even Reliance or maybe the foreign players, Adani, they all can venture into these things, but it all depends, because people will first be focusing more on CNG rather than PNG, because probably to lay the pipeline in the building and to cater to the residentials will be seen difficult, but creating the CNGs may not be that difficult and that problematic. And once the BPCL gets privatized, then again that will be a big threat. So taking all this into consideration, you should not be too comfortable on these stocks, and better to remain away. And that is what I've said yesterday also, that it is better to look to exit from the stocks because they are already ruling at a very elevated level, maybe at a 52-week high, which we have seen about 10 days back as well.
Okay. Well, speaking of infrastructure, telecom infrastructure providing company Bharti Infratel is a stock in focus. And look at its trajectory. I mean, Infratel is still down 10%, just off the lowest levels of the day. It's had a rocky last couple of weeks and months. Let's put up a longer chart on Bharti Infratel, 210 on the screens today. Mr. Tulsian, so much is being said about what is going to be the shape and form of telecom in this country. What would the call be on a stock like Bharti Infratel if we consider a scenario where this ends up being only a two-player market?
So maybe market is, that's what I've said in the start of the show, that market is considering that the end of Vodafone Idea is being seen, and this will be a duopoly with existence of only Bharti Airtel and Reliance Jio. But I don't think that that's likely to happen, because as I'm seeing that probably the Idea Vodafone has no courage, or in fact the Vice Council will prevail that not to defy the Supreme Court order. And they cannot satisfy the Supreme Court by just paying 3,500 crore and saying that adjust my 7,000 crore rupees from the tax refunds which we are due to receive from the government, because Supreme Court again can really reprimand the company that we are not here to collect your tax refunds. So I'm expecting that they will probably, in all probability, they are saying that as per our calculation it is 25,000 crore. Take ballpark, even on a conservative basis, it is at 30,000 crore. Because if company is saying 25,000 crore and DOT is saying 55,000 crore, take at least conservative 30,000 crore. So they have to pay at least 15 to 20,000 crore, which I am hopeful that by on or before 17th May it will get paid. Because people are not worried on the data payments by Bharti Airtel payments. And these are the only two major payments to be seen, which both of them will be making payments. So I'm quite confident that Idea will make payment, Idea Vodafone will make payment to the extent of 15 to 20,000 crore. Probably that will give the respite to all the players, that is banking stocks or maybe the infra service provider like Bharti Infratel, because people are expecting that obviously if the Vodafone Idea doesn't exist, then the tenancy ratio of the Bharti Infratel will fall, and that will be seen quite negative for the Bharti Infratel to see the margin decretive and one major customer seen going away.
Okay, well, let's see how this plays out. Thank you, Mr. Tulsian, very much for joining in and giving us your view on all the stocks and the market overall as well. Still down about 100 points on the Nifty, but the hope is that at least perhaps the low for the day has been made and the market's not going to breach those levels. So we're still nursing losses, but anyway, we are off the lowest level of the day and managing to stay above 11,900. Rakshit Ranjan, portfolio manager at Marcellus Investment Managers, is joining us on this leg. Rakshit, the markets had to deal with a lot. It started the year on a very optimistic note, and then came the budget, then came the coronavirus, then came, the lukewarm earnings season. What's your view on the way we are poised right now, index level of roughly 11,900?
Yeah, good afternoon. I'm glad you mentioned it like that because I think the number of events that create uncertainty in the short term in the markets, the list never becomes shorter. A year ago, we had different sets of catalysts that people were waiting for. This year, we have a different set. So this will continue. For the broader economy, obviously, it's a bit of a difficult situation out there. There are parts of the economy which are doing a little better. For instance, the middle class household income consumption of day-to-day essential items, that's a lot more resilient than the rest of the economy. The financial crisis bit, I think, which emerged over the last couple of years, might actually recover over the next, say, 6 to 12 months, we believe. But the bigger issue, which is the investment cycle, the capex part, job creation, it has taken a lot longer to come to where it is today, and it will take a lot longer to come out of where it is today. So that's how we sort of look at broadly three parts to the broader economic situation. As regards the market, our view remains that provided you're in it for the longer term and you are picking up companies which make the macro redundant, right? Because that's a very, very interesting way to build a portfolio, and that's pretty much what we aim to do. If you can figure out a set of companies which make the macro redundant, then you won't have to worry about too many of these external events which bring uncertainties to the short term in the market. So that's how we go about it, and that's the portfolio construction we have.
Okay. Rakshit, hi, good afternoon. The big concern for the market has been this selling in private banks of late. Of course, there's IndusInd Bank, which is stock specific, but others as well have cooled off quite a bit from their highs. Your thoughts on what's happening here?
Sure. So, look, there are two parts to this. One, whenever you look at a financial crisis, whether it be in this country or elsewhere, let's say you look at the 97, 98 crisis or the 2007, 2008 in particular crisis. During every financial crisis, the great quality lenders, which have adequate amount of funds on the liability side of the balance sheet, they also undergo a bit of moderation in their loan book growth rates. Because let me put it very, very simply. Let's look at, let's say, Bajaj Finance. It is lending at least 70% of its incremental loans to borrowers who are already known to the company, because there is a very high degree of possibility that it lends to a new borrower, and that borrower's credit profile goes through a deterioration over the next 3 to 6 months. So the great lenders as well, despite having the ability to accelerate lending in the center of the crisis, right in the middle of the crisis, they also decelerate their loan book growths. That obviously has an optical impact on NPA ratios as well, and obviously as the external environment incrementally deteriorates, there is some real deterioration in the asset quality, but only on the margin. Because of that, I think over the last 1 or 2 months, you have seen an HDFC Bank, a Kotak, to a certain extent a Bajaj Finance report say 3 to 5% lower run rate of loan book growth and of earnings growth compared to what normal run rate might have been. That does at times lead to a bit of moderation in their share price growth runway. But we are not too worried, because I think this is a great opportunity when you look at it from a 2 to 3 year standpoint. Next couple of years, a very handful of, literally you can count on the fingers of one hand the number of lenders who will consolidate the entire credit in India. And provided you can be exposed to 3-4 such banks or NBFCs, the loan book growth certainly won't be a concern, because they've got enough liquidity on the liabilities side, and there'll be fewer competitors and lower aggression over the next, say, 2 years in the aftermath of a crisis. At the same time, the asset side will be pretty robust. So that's how we're playing it.
Okay, Rakshit, I do want to quickly squeeze in some more questions. So the part of your portfolio, I mean, the large chunk of your portfolio is obviously consumer, and that's what you are most bullish on. But here's the thing, I mean, in this environment, companies on the FMCG side, they're perhaps still managing at least single-digit volume growth. But what about discretionaries? I mean, look at, one of the companies that you own, Page Industries. One could argue that second quarter running, the going is not that great with respect to earnings in the business.
Yeah, no, I mean, there at any point of time, we do have 1 or 2 stocks which are not going the way we expect. At times, it's a mistake. At times, it's a temporary issue with the company. In this occasion, I think with Page Industries, we believe there's nothing wrong from a fundamental long-term standpoint. It's a more of a short-term pain, especially the last quarter was more about margins. But overall, our portfolio delivered in the third quarter PBT level growth, despite Page Industries delivering a minus 26% PBT. Our portfolio delivered a positive 15% weighted average growth in PBT YOY. And at a PAT level, obviously, because our portfolio benefited from the corporate tax rate cut in a disproportionate manner compared to the rest of the universe, we delivered a 31% profit after tax growth YOY, despite Page delivering what it is delivering. So at a portfolio level, we are quite comfortable. There will always be 1 or 2 companies in the portfolio. As you said, the portfolio is consumption oriented, because consumption does offer a platform where there is resilience to the external demand environment, the macro. And on top of it, if you can overlay a monopolistic or a duopolistic kind of a structure, and most of our companies are that sorts of companies with a very high degree of pricing power, then that, I think, is the best way, we believe. And 30% plus PAT growth in the third quarter, we are quite comfortable with that.
Okay, the market's now seeing some bit of rally. The Bank Nifty future in particular is now seeing some bit of expansion. Just look at the Bank Nifty. In fact, it looks like there's some bit of premium which is coming back on that. This could lead to some, perhaps, that much awaited short covering. A couple of other banks like IndusInd Bank also seeing a bit of a move. Just put out the intraday chart once again on the Bank Nifty as well, and on a couple of others like IndusInd Bank, there's some bit of move which is happening. There you can see, as just of the lowest point of the day. But Rakshit, the consensus trade is now about the telecom being a duopoly and both players doing well. And Bharti has seen a massive rally after last year. This year also it's been one of the stocks of the year. Is this now an overcrowded trade?
I mean, So to begin with, we don't have coverage of telecom companies, and the reason why we don't have it is we don't see a very high degree of pricing power. So it was always a bit of a concentrated, as in not so fragmented space, even historically. So there were 3 or 4 players. Now there might be 2 is what the talk of the consensus is. But our point is that whether it is a 2-player market or a 4-player market, what you need is for the leader to say that there is a very high degree of pricing power available with me. The customer is loyal. He cannot switch SIM cards at the drop of a coin. As in, it shouldn't be an environment where 2 years down the line you can go for the cheapest telecom provider because nothing else is differentiating between one provider and the other. So that sort of an industry dynamics has to be created by the leader. If it happens in that way, then maybe it will make a lot of sense to buy and hold great telecom companies in India. But if it doesn't happen, then it's more of a commodity space, and we'll at least try to stay away from it.
Okay, so not willing to dial into telecom just yet. Finally, Rakshit, anything else that's exciting you? I mean, you're staying with your tried and tested financial bets that we've discussed. Consumers, obviously a big play for you. Anything else where you're looking out for ideas, whether it's autos or, the absolutely unloved parts of the market, which is the capex and economy side of it?
No, not in capex economy. We do have a couple of pharma companies. Both of them got added to our portfolio over the last 12 months. Unlike the standard pharma model of sort of exporting formulations to the American buyers, the companies that we have in our portfolio, one of them is a branded generics play for only the Indian market, so manufacture in India and sell in India only. And the other one, which is Divi's Labs, we recently added. That's obviously an API, sort of a monopoly in the API market, and also a very value-added sort of contract manufacturing space that it is present in. So those are a couple of examples of non-consumption, non-financials. But barring these 3 areas, which is a couple of pharma, consumption, and financials, we don't have exposure to anything in our portfolio as of now.
Okay, it's a bit of a covering which is clearly on right now. Let's see if that extends. The market overall is still weak, but from the lowest point, definitely you can see some short covering. The problem is the mid-cap index is just not participating. For the last few days now, there's been some selling which is there in the mid-caps. That is something which you can clearly spot right now. So auto names, Rakshit, any thoughts here? Because while we have seen the data may not have shown too much improvement, but stock prices have actually recovered quite a bit from the low point.
Yeah, so we do have one two-wheeler company in one of our advisory portfolios, not in our consistent compounders PMS. But other than that, I think autos is a cyclical play in India that we believe, and we are not best as yet to time cycles. We don't consider that to be our skill set, and hence the kind of philosophy that we follow, auto doesn't fit very well into that. So we don't have anything other than this two-wheeler company in one of our portfolios.
Okay. All right, Rakshit, then we will wrap it up on that note for today. Thank you very much. And thanks for your call on the market and the stocks that we've discussed. On that note, we need to move on. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign that empowers you to make the right decisions with your money. Now, as part of this segment, today we need to talk about the rules to keep in mind when you are engaging with your broker. Now, there's a very important concept of power of attorney which comes into play when you are looking at engaging with your broker. You may or may not want to give your POA to the broker. And the other thing to keep in mind is the fine print. What is exactly the contract that you're signing? Are you giving an all-encompassing, complete kind of a right to the broker to buy and sell securities on your behalf? Be very careful while negotiating some of these finer details and make sure that the ownership of the shares is in your name. Make sure that your contact details are absolutely up to date with both the depositories, the exchanges, etc., so that you can be contacted and you know if there is any trade that's taking place on your behalf which you have not authorized. So the power of attorney is the most important document that you're going to sign with your broker. Make sure you read the fine print and only sign on the dotted line when you are in agreement with the terms and conditions. So those are some of the hygiene elements to keep in mind. On that note, let's take a quick break. We'll come back on the other side and get you trading calls for the last half hour